Hello and welcome back to the Two Stewards Show. This is Mark and I'm here with Brent.
Hello, everybody.
And we're doing our second episode on the Rich Dad, Poor Dad. So from time to time, we're going to do a book review of books that have either influenced us or other folks in real estate. And Rich Dad, Poor Dad is one of those books that most people will cite as having influenced them in some degree. So last time we kind of covered probably the beginning of the book, the history of the rich dad and the poor dad. What else? The chapter 2, I guess, the rich don't work for money. Chapter 3, financial literacy, and
we learned about investing in assets versus liabilities, right?
Yeah,
it's Robert's big thing is own assets. Don't own liabilities, and how do you define an asset? How do you define a liability? And having the financial literacy to be able to, point to that, say that's a liability. I shouldn't buy that because that's gonna put me in the poorhouse. But that over there is an asset, and that's gonna put money in my pocket every month, and that's what you want. An asset, something that puts money in your pocket every month with minimal labor or contribution from you. Right, so that you can build your wealth over time. So again, we don't necessarily agree with everything Robert says, but we pulled this book off the shelf after it's been sitting on the shelf for probably 10 years. I don't know how long ago you read it, but
not that long ago.
Yeah, but it is a huge mindset shift for a lot of people to just step back and look at the system that we live in.
Yeah.
And say, okay, well, why is the system set up like this? And if it is set up like this, what can we do?
How do we use that wisely?
Yeah. And how do we react to the system? Do we just follow along and play the games that they put forward? Or do we try and deviate slightly? And he's presenting, I think you mentioned last time, it's somewhat controversial when this book came out.
Yes.
Yeah, people are like, whoa, you can't do that.
Yeah, because it was encouraging people to take risks, I guess, unnecessary risks.
Yeah.
And deviate from that sort of, the path of the poor dad, I guess. That typical path of get a good education, get a good job with a big company or the government.
Yeah.
With good benefits, and then you're set.
So just quickly, just to refresh, so the poor dad is Robert's actual biological father.
Yeah.
He's highly educated. He's got a job as a professor. And then his rich dad is his friend's father, who he spends a lot of time with. Mm-hmm. And this guy is an entrepreneur, and I think he dropped out of high school.
Yeah.
So he's not nearly as educated, but he's a lot more financially literate. And he's not in the government.
No,
and he takes a different viewpoint on a lot of things. So anyways, today we want to talk about kind of the next step in this book, where he starts talking a little bit more detail about the history of the tax system, the history of the system. So we want to dive into that a little bit for people, try and explain some of these things.
Yeah, taxes, it sounds so interesting.
As soon as I see the word tax on an email, or I just skip. I don't know. I'm not an accountant, so I send that off to the accountant, and they
hopefully figure it out.
Yeah, but that is like you said, figure it out. That's a big game. It's a big responsibility, is trying to learn the tax code and figure it out. Mm-hmm. But Robert does highlight how important it is to understand tax, because it's one of the biggest expenses we have. And we have to pay tax. Render
and the rich
Caesar.
need to pay more tax.
The rich do. Yeah.
Yes.
And we're not rich.
No.
No,
but that's the common. That's almost like the universal solution.
Yeah.
Right? When there's any
Tax
sort
the
of
rich.
inequality in society, or anything, the rich need to pay more tax.
Yeah.
Right? So is
it's
that
a default position, right?
Yeah. Is that a valid argument? Is it a valid position?
Yeah.
So I think we need to understand how tax is paid, who pays tax. Like you said, learn about the whole system. Because it's a pretty simplistic viewpoint, right? Well, just make the rich pay for it, right? And
well, okay, I had this the other day because I picked up the Hamilton Spectator. I don't know. It was a small one, so I haven't seen the Hamilton spec. But when I was a kid, it was like massive.
Yeah, it's not big anymore.
But yeah, I guess nobody reads it. So,
the paper.
Well, I started reading it and I was like, I can see why nobody reads this. Like, every single page for the first 3 or 4 pages, all the articles were about how the rich need to pay more, or the government needs to give us money for something, or we need funding for something because we can't make it on our own. And it's just like, wow, this is a constant refrain everywhere.
Yeah, everybody wants a handout, right?
Yeah. And do nothing and get something.
Yeah, and we're used to it. We're entitled to it, right?
And that's a human nature thing, right? Is I want something more than the other guy.
Yeah.
And I don't want to do anything for it or pay for it, ideally, right? That's like what's in our hearts. We want that. But
like, would it be different if I found a wealthy person and went up to them and said, hey, I need money for this, or groceries cost too much. You got to pay for some of my groceries.
Yeah.
I don't know. I would never do that. Maybe there's some
what would their reaction be? I guess.
Yeah. And like, would you ever consider doing that?
Yeah, no.
But why is it okay for us to demand that the government
does that
on our behalf? Because where does that money come from? Right?
That's a good question.
Well,
we should start a podcast called "Where Does Money Come From?"
It's like I don't know, the progression of life, right? You're younger and you're like, "Where do babies come from?" And then eventually you're like, "Where does money come from?" But yeah, maybe we should talk about taxes a little bit.
Yeah, so Robert introduces in this book the tax system and corporations, using the Robin Hood metaphor, right? So the story of Robin Hood, right? So you have this story, and it's kind of idolizing this figure who goes out, Robin Hood, and he takes from the rich and gives to the poor, right? And I think we generally think highly of Robin Hood. I don't know.
Yeah. He's a romantic figure.
Yeah. Folklore. I know my kids want to have a bow and arrow and be like him. I don't know. Maybe they just want to steal all the gold. But that's the attitude we have, right? That we were just talking about, that the rich should pay for it, that they have everything. Well, we just got to go in there and get it from them and distribute it to all the people who don't. So what's wrong with that philosophy?
Well, yeah, I mean, I guess maybe you could make the argument that in the time of Robin Hood, the rich were being oppressive. I don't even know. I wasn't there.
Yeah.
But that's sort of the argument, right? You had the feudal landlords, and there's no way for the common folk to ever better themselves, right?
Yeah.
There's no upward mobility either socially or economically. And you had the rich landowners, and they trod upon the poor. So that's sort of the narrative that I think we've brought along into our society, when we don't have that very same, we don't have that anymore. We don't have feudal landlords.
Yeah.
No, and we have landlords, and they feud with their tenants, but it's not the same thing.
Yeah.
But you have this romanticized notion, this ideal of the rich versus the poor, and then the hero, right? Who comes and solves that. And like, I don't know, there's a whole lot of psychology around sort of the hero's journey, and especially for kids, it's very important for them to sort of go on that journey themselves. As a hero. And you could even argue in our lives, right? You want to be a hero for your family, or for, that's a whole other topic, but and there's that's sort of a good archetype, I think, but we apply that in the wrong situation sometimes, right? With the wrong information, like today, where there needs to be that hero who will take from the rich and give to the poor.
So he basically uses this metaphor to say, well, we should study the history of taxes, because how does this actually come about? Because does the rich actually get taxed? And does that money actually go to the poor, right? Because we have this romanticized notion that, Robin Hood's out there, we're going to tax the rich and we're going to give it to the poor.
Yeah.
But when we look at the actual tax system, where is the money flowing? Like, who is being taxed and where does that money go? And, okay, well, there's so many different things we could talk about here, but is that process efficient? Is it fair? How has it come to be? How can you understand it better? And how can you use it appropriately? So he says one way, like the first step is to start studying the history of taxes. And that sounds like even more boring than just talking about
that sounds pretty exciting.
So the next 15 episodes, we're going to go through from 1700s onward, how taxes were levied upon the British and American citizens.
It is interesting that income tax is a very new invention in human history. And,
okay, so what did they do before that? Before tax? Like, we just think it's the norm. You go to work, you make money, and then you have tax, and then you live your life, and the government provides things for you. But, like, how would they do it before tax?
Well, if you think of sort of the medieval walled city, right, you would tax trade. Caravans would come through, or merchants would come in, and
so everybody lives in the city. They do their thing.
Yeah, or the city was the central thing.
Yeah,
right. So if you held a fair or like a market or something, the merchants would be paying some tax, either to have the stall there or flat rate or whatever it was.
Entry and exit.
Basically, it was trade, which produces wealth.
Yeah.
And the government would take a piece off the top of that, basically, for the privilege of being able to trade in my town.
Yeah.
And then, there's some sort of reciprocal agreements there that my town is safe and I have an army.
Yeah.
Or I have some sort of security so that you can trade in peace here.
Yeah.
Right? And then maybe develop roads where caravans could go between cities and between countries, and you would provide security for them.
Yeah.
There's sort of that implicit understanding, so that if they had to pay the tax, then that was fine. But
the other thing too is they had tribute. So if you conquer a nation, right, then you say, well, okay, you can live in this area, but you have to pay us, the new government, more money or some form of payment. Yeah,
and that probably one of the less effective methods of taxation, right? Because we sort of the West did that too, or the West, but after World War I, right? This is what the victors did to Germany. Essentially, they had to pay tribute, right? Like, you got to pay reparations for the war.
Yeah.
And all you do there is you breed resentment, and they caused a huge financial crisis in Germany because of that. And then what happened from that? Well, we know what happened after that, right? That created the conditions for German nationalism and for a new force to come up and save the German people from this financial.
See, I'm thinking even further back than that, like ancient.
No, I agree, but I'm just saying this is an example that most people would probably know about,
right?
As opposed to, like, I don't know, Constantinople, or sometime in Assyria.
Yeah. The other thing too, I think if the government or like whatever ruling structure, the king at that time had a monopoly on some industry, right, then they would make revenue from whatever resources were produced, right? Like, hey, I own this forest and all the people work in it, but I own the proceeds of this. So then you fund the government by that, or
like you think of Egypt, which for a long time was sort of the breadbasket of the modern, or of the civilized world, right? The grain merchants, like the pharaoh or the government would just take a portion of all the grain.
Yeah.
Right? And so they wouldn't be taking money per se, but they would be taking the grain, and then they would be able to sell that grain. Or do with it what they wanted at their leisure, right? So it's just like...
Which actually, we don't need to talk about this, but it keeps the government really accountable to the people in a sense, because you're actually taking their stuff, and if you take too much grain from all the people, they're going to go hungry, and they're probably going to go, I don't think so.
And that was always the thing, right? in the lean years,
Give
what
and take.
happened, the give and take, and keeping the sort of the populace happy, right?
Yeah. So how did taxes come about? Well, that is the history there. He goes through it in the book. What is this? Chapter 4. So he said that taxes were never really a thing, but occasionally temporary taxes
Income
were
taxes,
levied. Yeah, income taxes. Yeah, like directly tied to whatever income you earn, you have to pay tax. So, but occasionally, he says, occasionally taxes were levied in order to pay for wars, right? So then you say, okay, we're going to do this big attack on this place over here. So everybody chip in, give us a little bit of money so we can go and expand our authority and our nation. So income tax as a permanent levy on its citizens, that didn't happen until 1874. So like you said, pretty recent. And in the States, it's saying here it was 1913.
Right.
So 1874 in England and 1913 in the States. So we haven't had we have tax for 100 years in the US, which is fairly new concept.
Yeah.
And most of the people at that time, you think about it, were they were opposed to this measure, right? They didn't want income tax. And I think most people now probably don't want it either, but they can't see a way without it.
Yeah, but initially, who paid that tax?
The rich.
The rich.
Yeah. Well,
that's what it was,
said,
right?
Yeah.
It was like, don't worry. This is just a tax on the rich people.
Yeah. So that's how they... Yeah, because if everybody's anti-tax, the only way to sell it to people is to say, look, we're going to tax the rich. We're not going to tax everybody. We're just going to tax those people who have lots of stuff. So that way you can get like a mass of people, right? You can make this idea popular to everybody in the country by saying, look, you're suffering on hard times. You don't have as much as that guy. We're going to make that guy pay for these services.
Yeah.
Well, okay, I'll vote in favor of that, right? And then eventually this becomes law. And that was the adoption of the 16th Amendment. And so Robert kind of goes through this history really, really quickly. And he's saying, look, okay, the rich were originally intended to be taxed.
Yep.
But what actually ends up happening is that the middle class is the ones who are taxed, because the rich, they find a way to outsmart the system and they create corporations.
Well, because it's income tax, right?
Yeah.
So it's
Tax
total income
on income. Okay, let's talk about that for a second.
Remember. Yeah? You want it?
Oh, I love income. No. But yeah, so if you make income, then you're taxed. So who makes the most income?
Is this a trick question?
Well, yeah, so the poor people don't make that much income.
Okay.
But as you go up, middle class makes more income, right? Upper middle class. So who is in the upper middle class? Like doctors, lawyers.
I mean,
dentists.
people might argue and say, no, they're the wealthy, but not, I wouldn't say.
No.
Not if you look at total wealth distribution.
Yeah, so upper middle class.
So I think in Canada, if you're above, it always kind of moves, but to be in the top 20% of income earners, you got to be over 170,000.
Yeah, you had that pulled up, right?
The
Fraser Institute,
which is a little bit outdated, I think. But
who was Fraser, anyways?
And why did he have an institute? But yeah, that would put the top 20% of income earners at $170,000 or more, right? So the top 20%.
But there's a big jump from the top 20% to the top 1%, right?
Yeah, there is. So top 20% earned just under half of all the income, 49.1%, but pay, and this is, I think, 2017 numbers, so we're a little bit out here, but it won't be that much different. Like, if anything, it would be skewed even further, but they paid 64% of all personal income tax.
Yeah.
Right, versus the bottom 20% made 4% of all the income, but paid 0.6% of all personal income tax.
Yeah.
Right, and then so that ratio of income earned to tax paid is skewed. So there's more income earned versus the percentage of total income tax paid so this is divided into 5 parts.
You lost me. I don't know.
Yeah, sorry.
This is 5 points. This sermon is going to be 5 points.
No, so there's 5 income groups, basically. And the only ones that pay more, like a higher percentage of tax compared to the percentage of income, is the top 20%.
Right.
That's where, right? And then so that's the 5th group, if you want to call it. Then the 4th group makes 22.5% of income and pays 20% of all the tax.
So, but I think the general mindset is that income is a good thing, right? Like most people think, and that's what Robert's saying too.
You want to earn more income.
Yeah, you want more income, right?
Yeah.
Well, go to school. How do you get more income? Well, you go to school and you study hard.
Yeah.
And you get really good grades so that you're the smartest in your class. That means you're going to outcompete everybody when it comes time to get a job.
Yes.
So then you're going to get a job, and you're probably going to get the best job.
Yep.
And then you're going to get the most income. And you're probably going to work really hard at that job so that you can get a promotion so you can get more income.
You want to earn 6 figures.
Yeah, like
right?
you
That's
got to get the most income. And that's his assessment of the current system. And not only just like getting a job, but like the whole education system, everything is geared towards this, right? Like do all these things. And then eventually when you're ready to retire, you've kind of, reached the pinnacle of, maybe your peak earning years are a little bit younger, but you kind of made it, right? But when it comes to taxes, like income is taxed, right? Income is taxed.
Yes. Personal income. Yeah.
So if you have more income, you pay more tax. And that's where...
well, who does that benefit?
Yeah, well, benefits...
the government.
Yeah.
Right? I mean, you can make the argument that it benefits everybody because, in a perfect world, the government takes in tax, pays a little bit for administration, the bureaucracy, and then that money goes back out. It'll pay for healthcare, for security. For
that's how they generally sell it too, right?
Yeah.
We're going to do more taxes, but you're going to get this, and it's going to be great.
Yeah. But we have to remember, we don't have a perfect system. We have a massive bloated bureaucracy.
Yeah.
Which takes a ton of tax dollars. And like the government doesn't add any value.
Yeah.
Right? Other than, because it's getting worse, right? Healthcare, like you can argue for some of the services that we have.
Yeah.
Military,
like there's value to having a governing structure in your country to ensure stability and enforce the law.
There is the argument that really the government should exist to enforce property rights.
Yeah, property rights.
Yeah, and that's one of sort of the basic... I think that's more like Austrian economics.
But you're talking about the services that the government provides. They don't necessarily add value because you're taking money from someone else, like you're taking money from the citizens, and you're administering a service with a large amount of waste or bureaucracy involved, and you're not incentivized to optimize that system because you can just tax more.
Yeah, so originally going back to the sort of the medieval walled city. The government would take tax, and as long as it was reasonable, people would continue to trade there because they knew that it was a safe place, right? There was safety; they could do their trade there, and that would all be good, right?
Yeah.
And security, that was the primary, and upholding of property rights for whoever had property.
Yeah.
We've added all kinds of necessary things to that, right? So healthcare, I'm in favor of universal health care administered efficiently, which we don't have. But then there's all sorts of other things that creep in that we need, right? We have to have. Yeah. And like you're talking about you're reading The Spectator and everybody wants a handout because, anytime something happens, I can't deal with this. The government has to help me. And, maybe there's something to that in a certain degree, but we've added all these different services that are absolutely necessary, and
and one thing Robert points out too is that in the government, people get paid, like they get the standards of measurement, like that by which we compare, like the private sector and the government are different because when you're in the government, he says, you get paid to spend money and hire people. Yeah. Right. So if you don't do your job and you're not spending, so the more you spend And the more people you hire, the more your part of the government is respected and praised.
Yeah.
Whereas in the private sector, if you just started spending more and hiring more people, your business would go out of business.
Yeah.
So he says the reward is different, right? You have a respected organization as one that is efficient and prudent with their money, right? They have money and they work within their resources and they maximize their output and their impact on society and the value that they're creating and adding, right?
Yeah.
So the whole thing is flipped.
Yeah, whereas government, the only thing that is respected is big.
Yeah.
Right? No, not efficiency, not anything else. Just
and then
big.
In turn, when it gets big, you need more taxes.
Exactly.
And it's this never ending like growth cycle and more tax. But the tax side of it, I forget we were talking about this earlier. How do we go back to this now? So if your income, our camera special. If your income is taxed through income tax and you make lots of income, you might think that is a good thing, right?
Yeah.
But if your income is taxed, well, how can you avoid being taxed? And that's what he's saying is the rich kind of found a way to legally avoid being taxed. And that was through, he speaks about it in history, the corporation, which he says came about through the days when they were sailing ships across from Europe to the New World.
Yeah.
And rather than put all of your
eggs in one basket.
Yeah, I don't know, maybe more. Yeah, maybe all of your wealth on the line.
Yeah.
So if you send a ship across to the New World and all the crew dies and you lose all kinds of money and then there's people coming after you, they can't take your like your personal belongings, your house and everything, right?
Yeah.
So they set up a corporation to say, okay, this trip, all the risk is in this trip. Like if you go on this trip and you lose your life, you can't come after me and my house and my family.
Yeah, or if you had partners who were investing money, if they lost that money, then that would be lost and there's no personal recourse.
Yeah.
And then on the flip side, if it did very well, your gain was limited because you're sharing that with the other partners.
Yeah.
Right? And so they had very excellent upside, almost unlimited upside, but limited downside.
And that's limited liability corporation.
Yeah. LLC.
Ooh, I've heard of that before.
Yeah, right?
Have our listeners heard of that? I don't know. But these are the things that sound kind of dry and a little bit like, do we really need to talk about corporations and tax? But understanding them gives you huge advantages, right? Because it's a legal way to shelter yourself from taxation.
Well, and more than that, it's not because people will say, oh, there's loopholes or, that's a
like as
word.
Christians, how do we think about loopholes? Like,
but if the government has set up the tax code in a very specific way, and like our tax code is
specific, but it's very convoluted.
Yeah, it's maddening to a lot of people, and I can't remember is it the angry accountant or something?
Oh, yeah.
No, there's a fella I've heard who's just like he's an accountant. And generally that's your personality would be probably a little more dry if you were an accountant, generally speaking. But he gets very animated and very worked up about our tax code, and like rightly so. It's so convoluted. It'd be much better with just a flat tax. But anyways, the point is the government has set up the tax code. They have set up both income tax and corporate tax for reasons. Right? And the reasons are to encourage people
in certain directions.
Yeah,
right?
in certain directions. So if you're not interested in like making the economy grow through trade, through creating assets, through starting a company, all that kind of thing, then that's fine. Then you just pay income tax. Yeah. Right?
You're penalized in a way, right? If you just want to work for yourself.
Penalized, yeah. Well,
there's a cost to that.
Right?
Yeah.
But that's, we always think of that as the default, as income tax as the default. Well, income tax isn't the only source of income for the government. Yeah. Right? They make money also from trade. So maybe we should think of that as the default, as business tax as being the default, and then income tax being like,
supplemental.
Well, those people, because, that's how it started, right?
Yeah.
trade tax.
Yeah.
And like in the time of Jesus, there were all kinds of ridiculous taxes as well. But income tax was like maybe 1% of all the tax that the Romans actually collected in that system. But the default is tax on trade.
Yeah.
And then we've added income tax to that. So that's sort of, you're kind of flipping the script a little bit there.
Yes.
When we think of, like, maybe we should be thinking more in terms of having a corporation and paying corporate taxes, because like the government, as I said earlier, doesn't add anything really other than some of these benefits, like it doesn't add anything to the economy, I should say, right? People argue the government spending increases the economy. That's like, no, because that money comes from the economy, first of all, from tax. But the only people that add value to the economy are like people who form corporations, who do business, who build homes, right? The only people
we can
that
simplify it and say
housing are landlords.
Yeah, we can simplify and say like all this stuff is the tax code, personal and corporate, is set up to incentivize certain behavior.
Yeah.
So if you say, okay, I just want to work for myself, I'm going to get a job, I'm going to make lots of money, well, you're going to pay a huge percentage of that in tax, because what are you doing for the government? You're not creating any jobs, you're not creating any housing, you're not making this, I mean, sure, you can make this a better country in other ways, but when it comes to your personal income side of things, like, you're not contributing anything other than just the labor you put in, right? Whereas a business owner, he's going to get taxed in a different way, because, and the code's set up like this, because he's getting rewarded or incentivized to provide jobs and good paying jobs. And he's rewarded when he's making products that are going to be exported, or he's building housing, right? So all of these different parts of the tax code kind of set up incentive structures for us. And the problem is the system is set up such that we just learn about the one, right? We learn about go to school, get a good job, get your, like, the most amount of money, and that's how you're going to do well. And you kind of roundabout figure out about this other one where there's corporations. So he's really highlighting that. Where's this awesome one? Which one sounds harder to you? Page 191. Work hard, pay 50% in tax, save what is left. Your savings then earn 5%, which is also taxed. Or take the time to develop your financial intelligence, harness the power of your brain and the asset column. So
for most people, it's number one, right? Just go to work and get taxed. Honestly.
It's the easy path, right?
Yeah, path of least resistance.
But we do this in a lot of areas in our life where it's like, okay, you just do the thing. Yeah. Even though it's moderately difficult or like it stresses you out, but you don't sit back and think, okay, how can I actually make this process easier, and spend a couple days coming up with a way to do it repeatedly easier, right? And there's pain up there at first, right? Because generally when you're trying to achieve something, you just want to go do it. You don't want to like sit around for a week thinking about how to do it better. Yeah. Because then you won't actually do the thing, right? You kind of want to get the monkey off your back and do the thing right away.
Yeah, and we talked about that before, right? Time preference. I mean, Kiyosaki doesn't talk about this, but what is your time preference, and can you plan ahead? Yeah. And I think we kind of beat this to death when we were talking about money.
Oh, I love beating it to death.
Me too. There's all kinds of dead horses around here. There's no dead horses, just a disclaimer. It's a figure of speech only. Yeah. Right, but that is the idea behind capitalism, which is, maybe that's a dirty word, but is essentially making capital, saving some of it, and then risking that in some kind of endeavor. So, and usually that requires planning and forethought, right? We've talked about the old days building a mill. Yeah. So instead of just growing grain and then eating it,
like grinding it by hand and making bread and then eating it.
Yeah. You have to pool your capital with others, build that mill. And then all of a sudden,
which takes 40 years to pool all that capital and build it. A lot of sacrifice, but it makes a lot easier once you have a mill.
Yeah, and it makes a big difference in everybody's life.
Yeah.
And that makes everybody's life better in that area.
Yeah.
Right? Which, again, the government can't do. We look at the government to make our life better, to give us a handout, whatever, but they never, ever do.
Mark's running for office. Another comment he had here was, business owners with corporations, so employees, okay, let me actually do how he does in the book. Business owners with corporations, they earn, second they spend, and then third they pay tax.
Right.
The employees who work for the corporations, they earn, then they pay tax, then they spend. So which one do you think is better?
Yeah, obviously it's number one. And
is that unfair though, that the business owner owned the business? Sorry, go ahead.
No, because you mentioned before, and the part he didn't have in here, but he does talk about, is then saving.
Yeah.
Well, then you're going to save, and guess what? You're also going to pay tax on those savings, unless you're doing like an RSP or something. But generally speaking, that's how it works, right?
Yeah.
Whereas the business owner does not.
Yeah, but so how can the business owner earn, then spend, then pay tax? Because doesn't everybody have to earn and then pay tax on what they earn, and then they have a little bit left over, they can spend it?
Well, if you have a corporation, then you have write-offs.
Yeah.
The infamous write-off.
Yeah.
It's all a write-off.
Yeah.
Do you know what a write-off is?
That essentially just means you spend it before you get taxed.
Yeah, so you take money in, you spend it on something useful.
Yeah.
Right? If you're spending on something silly, well, you still owe the tax on that original amount. But if you are spending it to grow the business, then that can...
Or if you were going to spend the money anyways, personally, but there's a way to have the business spend the money instead. Yeah. Right? That's the idea.
Yeah. Yeah. Like, I think... well, just purely looking at it from like a corporation perspective, it's not earn, pay tax, then spend, right? It's because if you're going to trying to grow your business, if you're going to buy a piece of equipment, you have to buy that anyways.
Yeah.
But the government realizes that if you're going to buy a piece of equipment for your business, that's going to make it either more efficient, or bigger.
Yeah, so which is good for them.
Yeah, employ more people who are going to pay income tax.
So you're rewarded for that behavior when you're earning inside your business or inside your corporation, and then you're spending it on things to improve your corporation, because the government's going to benefit ultimately from more people being hired and more production.
Well, and not only that, but the only one in this scenario that's adding value to the economy between the government, the employees, and the corporation is the corporation.
Yeah.
So the government at some level recognizes.
I mean, the corporation couldn't function in and of itself, like without the employees, obviously.
Yeah. Yeah, but I'm just talking in like sort of abstract economic terms. If you're talking about the size of the economy or just the economy in general, like we talk about the economy like it's this mystical being, but that's just
like you should speak in specific, clear, understandable terms. You can keep the abstract, but no, this is good.
No, that's your job. To clarify. Okay. But the only the economy is just companies in a certain area working and making money, right?
Yeah.
And we've talked about GDP and how we measure GDP with government spending as well, but that's not really the true measure of an economy because that muddles it. But and again, the only ones adding value are corporations or whatever other form of company.
Yeah, and you kind of touched on this, but just briefly. So I think the idea is that to get ahead, right, you have to save something at the end of the day.
Yeah.
Right. So whether you're an employee earning an income or you're a business, a corporation, you're earning income, like the idea is that at the end of the day, you want to do your work, make your money, pay your tax, and then I guess that's the order if you're going to, and then spend it on the things you need. And then at the end, have something left over.
Yeah.
And the more you can have left over at the end, the sooner you can save it and use that for other things, right? And that's the capital appreciation you're talking about of building a mill. We keep going back to this mill.
I like it, the old mill. Well, and I think in your example,
but which one has more left over at the end of the day, right? And that's a simple way to kind of picture it. Is
like of the
right, yeah, because if you're trying to save money, right, and you get taxed right away, and then you have to spend, well, then you're gonna have less left over. But if you spend first and then get taxed on what's left over, you end up with more that you keep for yourself. At the end of the day, right? And that's the power. Like that's where a corporation is a structure that helps you use the tax system to your advantage.
Not just to your advantage, to everybody's
advantage. And the only reason it's to your advantage is because it's to everyone's advantage. And that's how the code's set up.
Yeah, exactly.
Are we making this simple enough for people?
I don't know. People can email in their complaints.
We got a department for that. And we're hiring. It's actually expanding,
Okay, so a couple points.
We have to tax our listeners.
We could find a way to do that.
Every download.
No, I think you summarized it well, right? That I can't remember what you said now, but basically that it's good for you because it's good for everybody else.
Yeah.
And so incentivize that behavior. And when you look at it like that, then all of a sudden it's like, okay, so paying less tax is not like, it's not a bad thing. It's a good thing because who is spending with the savings that are left over in each scenario, the employee or the business owner, like what happens with those savings?
Yeah.
I would argue that the employee is more likely to save it in a personal savings account of some kind, whereas the business owner who has this experience and like looks at that not just as like, oh, here's a lump of money that I better hold on to for retirement. It's like, I can turn this into something else. I can go and spend some of that or all of that.
Start another
business or increase my business and just make things better. And again, that's better for everyone because now you have more people. If it's all about increasing tax revenue, then you need to incentivize corporations.
Yeah.
Because that's how you get more tax. It's not by just income earners paying income tax. Second point on a little rant. Well, you talked about...
Out of 5. Second point out of 5.
You said, you should run for office, right? And, I was just thinking...
I didn't mean like run from office. I meant run
No, I would run
for
from
office. Okay.
Well, nobody ever gets elected, and maybe previously this could have been a platform thing, but you never see this on a platform now, is I'm going to make the government more efficient. I'm going to cut. We're doing austerity measures. All this stuff, right? Whether you're a conservative, quote unquote, or a liberal or NDP, whoever, when it's election time, it's all, how are they going to spend money?
Yeah.
Right? So what's the best way to... It's not a question of should we spend this money.
It's not even that. It's how can I most popularly spend the money? Like how can I spend the money to get the most people to vote for me?
Yeah, that is the idea.
We see right through it.
No, people don't.
Oh, man.
Unfortunately.
They don't listen to the podcast.
We're working on it, Brent.
Okay.
We're getting there. Right? But whether, it drives me mad, whether you're conservative or not conservative, right? It's how do we best spend the money, which really just means how do I best spend it to get elected, not best for the country.
Yeah.
But people realize that nobody is going to get elected on an austerity platform or just a responsibility platform. And the only time that stuff ever happens is when it's inevitable and it has to happen, and then it doesn't matter who's in office, right? When you look at Italy or Greece or any of these countries,
it's just a disaster.
But when push comes to shove and they go broke or they default, then whoever's in office has to do this, right? Either they quit and they let someone else do it, or they bring it in, and it doesn't matter what their political persuasion is, because at that point they have to do it.
Yeah.
But
okay.
But this is part of the problem. Almost done. Right?
Summary?
Maybe. No, but nobody will vote for someone who's promising cost cutting.
No.
But that's the problem. The people will not vote for that.
Yeah.
So then what's a politician to do, right? Do you just go on a false platform and then...
Relinquish control of the money.
Yeah.
See if that goes. But anyways, this ties back to real estate because Robert's, I guess we kind of introed the whole book by saying that this book has impacted a lot of real estate investors, right?
Yeah.
And there's a reason for that. And like there's many reasons in the book that he kind of gives, like real estate is an asset. It's not a liability, right? So if you buy a property, it could put money in your pocket every month. So that's an asset. So if you save up this money, you buy a rental property that generates money for you every month. Well, that's great, right? Because you're on your way to financial freedom or, but then also the concepts around tax and corporations. So there's benefits that are kind of built into real estate. And we can get into this in a lot more detail, but just from a high level, owning a piece of real estate has advantages from a tax perspective because like we kind of touched on, right? If you're the government and you think about it, I want to incentivize the creation of housing.
Yeah.
Well, they reward you for owning real estate. So you can actually depreciate the value of your property over, like you have capital cost allowance. This is getting a little bit technical and I don't even know all these things. I don't
appreciate that at
all. But yeah, needless to say, it's an asset class that offers a lot of tax advantages. Did we talk about that on the Why Real Estate episodes? You can go back and listen to that.
Excuse me. We didn't. We touched on tax. We didn't get into it too much.
It's so fun.
Yeah, just eyes glazing over. But so that's like you raise another important point or touched on it about buying real estate, creating housing, right? Who creates housing? It's not the government. It is not the government, people. They don't create housing.
Well, they just said they did. Trudeau was in Hamilton recently. Said they $64 million to create and build or renovate more than 214 new units.
So I would really love specifics on how they actually did that.
Where did the $64 million go? Or, million. It wasn't trillion yet.
No, not yet. I mean, we're getting there. I don't know if you want to get into any of those specifics, but
your point is they didn't.
Suffice it to say, they didn't do anything.
Yeah.
They rode on the back of private investors who saw this deal through, and they did contribute a little bit of money. What was it for better financing terms? To get them into a higher tier. Yeah, exactly. Well, so, some deals, right? Some maybe the money. I don't know. We'd have to look into the. Like you said, we need to look into the deal details. Yeah, it's not like the government went in there and said, "Okay, Mr. Contractor, you're going to build this unit here, and I'm going to pay you."
Yeah.
Right? Like no, not at all.
Yeah.
So, but does it? What's more popular to say? Like, we invested money and created 214 housing units, or we were sort of on the edges of this program and we helped improve financing options for developers, and therefore these units are getting built. Although these units would have got built anyways.
Yeah.
Like that's not a real great announcement, right?
Yeah. So, and the tax side of things when it comes to real estate, I guess to simplify it is that certain things can be deducted from your income, right? So if you earn income, and let's say you earn income at your job, what can you deduct from that income before you get taxed? Well, when you own real estate and that produces income, right? You have rental income from your real estate investment. You obviously have expenses, but some of those things can be deducted before you pay tax, which has a huge benefit, right? Especially over time. Yeah. As you start to look at your cash flow over year to say, look, okay, well, I would have spent this much in tax, but I could deduct all of these other things before I had to pay the tax. Yeah. Well, then I have more left over for the next year.
Relating to that specific asset.
Yeah, to that property.
Not your personal income.
Yeah, exactly.
So let me tell you something beautiful about investing, or about, I guess, being in the United States, because you can be a real estate professional, which means you have to spend a certain amount of time on real estate, but you can also have another job, and you can take the deductions from your real estate and apply it to your personal income.
Yeah. That's huge.
That's huge. Yeah. Amazing. So you have people who don't pay a lot of like they can still work a job, and they end up not paying very much income tax at all because they're producing deductions from, and the system is much, in my opinion, set up much better.
In the States, you mean,
in the
versus
States
Canada.
for deductions and so forth.
Yeah.
You lose some of that as a foreign investor. You don't get all of those benefits.
Yeah.
It is still overall better, but just imagine if we had that here. I don't think we ever will.
Yeah,
but
I guess the key
would be
takeaway
a
then
beauty.
is that you want to increase your financial literacy, as Robert says, to understand, don't necessarily have to understand the history of the tax system and all of these things, but it's good to be aware of which things are tax favored assets to invest in,
Yeah.
and what ones are or what sources of income are going to penalize you the most, and that is your job income, as counterintuitive as that may seem, right?
Yeah.
So yeah,
But that's a
educate yourself
huge-
about this.
That's a huge point, though, once you understand that, right? And that's why the book was so controversial when it came out.
Yeah,
Because he's basically saying, well, I mean, he said it, savers or losers.
yeah,
That was one point. But basically saying, like, this ideal of getting a good job, making lots of money, is not the best option for you.
yeah,
And for some people, that's what they want to do. That's fine. But when we just sit back and look at it from a numbers perspective, that's not the best option. And that's, even now, people are still buying into that sort of the old ideal, I guess. And it's once you sit down and realize it, you're like, wow, that really is interesting. Because as a business owner, you don't actually need to make as much money
yeah,
as T4 earner.
yeah. Salary earner.
Yeah, salary earner in Canada, right? Because of the deductions that you can have. So what does that mean? Like,
Yeah,
maybe you don't have to work as hard, spend more time with your family, or maybe you can, spend time doing other stuff, or you can work just as hard and make more money
yeah,
because of the deductions.
yeah.
I'm having trouble here.
We're gonna get an
Get a
accountant.
coffee.
Maybe we'll get an accountant on in the future.
Yeah.
Is that a good idea, or is that gonna be really exciting? I mean, boring.
Have to be the right accountant, that's for sure. Maybe we need the angry accountant.
If you're an
on here.
accountant and you want to prove us wrong,
If you can make tax exciting,
yeah, give us a call at 1-800.
boring economics.
What are we gonna do next time, Mark? We'll wrap it up.
We've sort of, I think we're kind of going through the book in chapters, right? So chapter 4 was mind your own business. So that's kind of working for yourselves, which we've outlined fairly strenuously. Chapter 5 is about taxes and the power of corporations. Chapter 6 is the rich invent money. And we've kind of talked about this, right? Through like having a corporation, creating housing or creating employment. And then, I think we can do maybe the last few chapters in the next one in our very roundabout way.
Yeah, I have a couple things sorry everybody, but I had a couple things that popped in my head. One is that,
See, it's not always me.
so taxes, you have little control as an individual. You have little control over what happens with the taxes, right? Like they could just raise them whenever they want. Yeah. So if you're
Spend it on climate
structuring your
change,
life,
whatever.
so if you're structuring your life so that taxes are minimized and you do take advantage of corporations, your risk is a lot lower, right? Like you're not going to be taxed all of a sudden more heavily. So the least amount of tax you can have. That's one point. And the other one is just a quote from the book. So we had the thing we talked about last week, which is the income statement and balance sheet, right? So you have your income and your expenses, you have your assets and liabilities. So he made an interesting comment. So if you have your income, your salary, that's essentially working for the government, working for the company.
Right.
You have your expenses, which include taxes, which is working for the government. And then you have liabilities. So maybe your house, right? You have a mortgage, and that's working for the bank. So what's in your asset column working for you? Maybe we'll just leave it there.
I think that's a good spot to end it.
All right.
Okay. Well, thanks for listening, folks. Hopefully you got something out of that. And tune in next time for the exciting conclusion to the review of Rich Dad, Poor Dad. And until next time, steward your wealth wisely.
Thanks for listening to this episode of the Two Stewards Show. If you like my voice better, click subscribe.
And if you like my voice better, click share.
If you like both, give us a 5-star rating.
To interact with the show, feel free to reach out at hello@twostewards.ca.
We will see you in the next episode. In the meantime, steward your wealth wisely.